Hey guys, this is Frank from Altcoin Buzz. So today I've got some mixed emotions and there's something very important which I think that we need to talk about. And the mixed emotions arise from me talking about Sushi yesterday and of course this whole yield farming boom. So if you go into search here, the trending searches here, as you can see, YF, anything which has YF in front of it is trending. We have already YFValue, YFLink, Yearn Finance, and DeFi.money YFII, YF1. So these are all trending. They're all booming, all but one, which I will show you, which is one of the reasons why these YFIs are sort of very dangerous right now. Now, in terms of the fundamentals of Yearn Finance, absolutely, there are some very solid fundamentals. But, you know, I'm an investor, I'm a trader, really at heart. As much as I like this technology, I think a lot about the numbers. I look at charts all day, and there's something extremely concerning about all these YFI charts. And I know a lot of you guys out there are probably just buying this for the first time. You're seeing it go up a lot, and you're like, oh, I should buy it. And I just want to make sure that you're doing it responsibly, that you know what you're doing, that you're aware of the risks, okay? So today we're going to very briefly look at the different YFI madnesses that we're seeing of YFLink, YFI2, YFFI. We're going to look in a bit more detail at YFV and YFL and also YF2. So I'll explain to you kind of what the differences are between those. Of course, Ethereum transaction fees are absolutely going nuts right now. They're the highest they've been in many, many months. I'm going to show you some perspectives from CoinDesk. Also, I've been watching several other influencers talking about this, and there is a very common point of view about all this Yearn Finance, which I really want you guys to take home after this video. If you enjoy this content and want to see more of it, don't forget to subscribe, like, and hit that notification button as it really helps to support the channel. Before I get started, I just want to let you know that I am not a financial advisor and that trading and investing presents financial risks. So the reason I have mixed emotions today is that, you know, I made this video yesterday, don't miss out on the hottest yield farming token. And, you know, I'm purposely creating FOMO, and hey, I experienced the FOMO myself, and I bought some myself. But the fact of the matter is that I wouldn't be surprised if a lot of you are buying this or buying other YF tokens, you know, with large sums of money or sums of money that you're not comfortable losing. Unlike me, as I say, I bought just a tiny amount of this Sushi token, which I talked about in this video. And as excited as I am about it, you know, things which have gone up exponentially, they come down hard. It's not a matter of if, it's a matter of when. So I'm going to go through some of the comments which you guys made in the video. Here we have Gabe81871 giving his interesting perspective on providing liquidity. Tried providing liquidity with ample forth to Uniswap. Only did it a month, getting everything back to ETH, cost about 85 bucks in fees. Still made about 33% after fees, but it was kind of a hassle and could probably have gotten better returns with emerging low caps. Now, on the channel, we have been covering a range of these emerging low caps. We gave you guys some amazing calls. Of course, they didn't all pump like crazy, but most of them pumped, and at least half of the ones that we've talked about, if you look at our top altcoins to watch out for videos, you know, our top altcoin picks, you know, so many have done exceptionally well. So, you know, if you're making a few percent here and there with yield farming, you know, it's understandable that, you know, investing in these low caps can actually provide better returns, which is what I have been doing for the most part for the last month. Now, Maryland Sandman here, interesting perspective. DeFi is old news. Can't use DeFi tokens at all when the fees are as high as they are unless you're buying 10K worth or more. Now, I don't usually buy or sell 10K worth or more. I do usually sell, you know, several thousand. And I agree that if you're trading in like hundreds of dollars, it's like, oh, it's so disgusting to pay those fees. That being said, DeFi is not old news, guys. DeFi is absolutely pumping. If you don't believe me, look at the volume for Uniswap protocol. So in yesterday's video, I said it's amazing. We have 600 million. The last day, we've had almost 1 billion in volume, guys. Liquidity absolutely skyrocketing here. Now, obviously, this is going to correct at some point, but DeFi is not old news. DeFi is very much the news. And, you know, I talked to someone today at a cafe. You know, he asked me, what are you up to? And I said, yeah, you know, I'm full-time in crypto. You know, it's really exciting. And he's like, oh, yeah, you know, I don't really understand it. It's a bit of a gamble, isn't it? And I was like, this is why we're making so much money, because, well, the average person knows next to nothing about crypto. They don't understand why DeFi is creating this revolution, why it's only going to go up in the long term. Of course, in the short term, I'm very skeptical. especially with these yield farming tokens, which is what I'm touching on today. But in the long term, this is incredibly exciting. We are offering finance, we're offering traditional finance tools to everyone in the world without needing to have a bank account, which is just impossible, which is unheard of before this. And we're taking out the middlemen, we're taking out, all the centralized exchanges. Guys, in a few years, I'd be very surprised if centralized exchanges have anywhere close to the market share that they have now. So yeah, DeFi is not old news, but yeah, if you're a small player, you're trading in several hundreds of dollars, then yeah, I agree that, it's this whole Ethereum network just seems really annoying right now, and it's kind of like the old traditional finance, right? Where you need to invest at least X amount of money before you can even invest. So that really pisses me off. But we have all these layer 2 scaling solutions, and here's pseudo crypto YFFI more than 800% up. If you look at this and you're like, oh man, I should get into this, that's the wrong perspective. That's the wrong reaction. And again, we will look at these charts in a little bit to see how crazy it is. So Fabrizio here, what about Wi-Fi and Wi-Fi? I think he means Wi-Fi I and Wi-Fi 2. I'm not sure exactly which ones he means. Are they legit? So Wi-Fi Yearn Finance, it has been audited. It is legit. I mean, it's ranks number 28 right now. Yearn Finance has a $1 billion market cap. This has had a long, steady rise over here. We've had an exponential move recently, but now we've had a sort of correction. Honestly, I haven't gotten into any of these apart from Sushi. I just put a tiny, tiny amount. But if I were to get into any, I'd probably get into Yearn Finance, since it seems the most sort of steady, the most stable. And of course, it's even corrected a bit over the last 24 hours. So there is credibility to these protocols. They do offer value. The thing is that these charts have been going up like crazy. So Yearn Finance YFI has gone up 10,000% in just 2 months, okay? So, do you want to buy something which has gone up 10,000% in 2 months? Well, if you do, fair enough. It's, when it went up 5,000%, it was still a good time to buy, and that might sound like a lot. But now let's have a look at some of these others. So DeFi.money YFI II. I mean, look at this exponential move up. This is not the time to buy, guys. This is what the warning is about. Okay, if you've bought at a much lower level and, it's a tiny percentage of your portfolio, and when I say tiny, I mean really anything more than 5%, on these coins right now, if you're buying, makes you pretty big degenerate, if you ask me. And then we have DeFi.money or YFI II. Now have a look at this. Also, we just had this exponential move up. Now, from a portfolio perspective, from a money management perspective, if you're putting any more than 5% of your assets into something which has gone up this fast, this quickly, I don't think that's the most responsible thing to do. You're likely going to see a big dump. Now, if on the other hand, you put in 1% and now that represents, 7 or 8%, I would definitely be taking quite a bit of profit on the way. And as I say, I definitely would not be buying anything which has gone up this quickly. But I mean, it's absolutely nuts. YFValue, YFV, I mean, they all have slightly different value propositions. We'll look at this in a bit. But again, they're just going up like nuts. This is up 63% today. YFLink up 126. Guys, this is not sustainable. Like all these coins going up, this is adding value, but this value is not as valuable as it is right now with all, it's not like we have Bitcoin crossing 20,000 and loads of new money coming to the space, loads of people who really want to lend out their crypto, to do other things with. It's people just recycling yields, basically. YFFI up 52.6%. Just a straight line going up. This is not a good time to buy. Guys, if you have any of these, please sell some, because of course, we could go up a little bit higher. We could go up a lot higher, to be perfectly honest, but it's just not smart to just keep a lot of money in this, and especially it's not smart if you haven't taken any profits. Now, yield farming token is an example of where things can go very wrong. Look at this market cap, $917,000. This is minus 52.6% in the last day. So if you're all excited about YF and you're buying anything with YF in front of it, well, this would have been one example of how things can get very disastrous. I mean, look at this chart, absolutely disgusting. We started at a price of just $1. We had this crazy spike. I don't know what happened there, up to 776 and then all the way down to 26. Again, some spikes, but like just absolute dump since the top. I mean, if you go from the top here, $830, or let's say you'd have bought even sort of halfway through at $358. Right now we're sitting at 209. We came down to 80. I mean, this is just nuts. I mean, I'm not sure if this is the correct all-time high. Sometimes CoinGecko doesn't get it right. It must be very hard with all the different price feeds. But in any case, this just shows you how quickly things can go in the wrong direction, all right? So please be very careful if you're buying these. So here, Anthony Pooler says, but you didn't mention YFVault, and it's been audited, and Sushi has not been audited, and YFVault has 400 million staked in only 1 week. And they created 2 coins for their platform to assist with the platform, and they are going to launch version 2 pool, so you can stake YFVault, which will get the price to go up in value a lot. It's the only legit solid fork of YFI. Now, I must admit, I don't know enough about all the different forks to really claim which one is the most legit. But the fact of the matter is that, a lot of these coins have gone up very quickly. Now, guys, if you want to get in, and if you know the fundamentals and you're really, you're very confident about what they are, the time to get in is when we have a consolidation, at the very least, a sideways sort of action. Okay, so, the general idea is when things go up a lot, you just wait for them to come down a bit and then you buy, or you wait for them to go sideways a bit and then you buy. Like, I wouldn't want to buy this. And admittedly, I did buy Sushi, when it was at $7. But this was just because, first of all, I bought a tiny amount. It was just less than basically 2% of my portfolio, even less probably. Yeah, it's about 2%. And, I got in at about $7. But this is really my degen play. Like, I'm aware that this is a highly speculative play, that it's already gone up a lot. And, the reason I got into this was, well, because I'm familiar with Uniswap and I use it, and their value proposition sounded quite interesting to me. So it's pretty much like a long-term hold, to be honest. I'm not really going to sell unless there's some major vulnerability. And honestly, by then it will probably be too late. So basically what I'm saying is I'm aware of the risks, and I hope that you guys are also aware of the risks when you get into these coins. So Allah Salha says check YFV. A lot of people are talking about YFV here. We will look at that in a bit. Okay, so we'll start with this article on PublishOX. And by the way, guys, here, look at this. Attention, they actually pay out every week in crypto. This week's payment has been delayed due to high gas fees. Their gas fees have gone up exponentially, so it's not financially viable for them to pay out as regularly as they did before. They have several different solutions which they're thinking of right now. I really like PublishOX. I used to write on this platform. But anyway, YFI, YF2, YFV, what are these and how they differ? I'm not going to go through everything, it will take too long, but basically, YFI protocol, which is the original one, Yearn Finance protocol, started in January 2020, and the YFI token launched in July 2020 with no pre-mine. And it's crazy to think that this was just, 2 months ago, pretty much. So very basically, with Yearn Finance, or YFI, it's simply described as a yield aggregator for different lending platforms that rebalances for the highest yield during contract interaction. So when you lend out your money, you get a certain reward, you get a certain percentage. Well, this basically looks at all the different places you can lend out money and where you can borrow money from, and it gives you the best rates possible at any given time. So it was built to maximize the annual percentage yields APY for its users. And it uses DeFi protocols such as Curve, Compound, and Aave to optimize its token lending. Like I said, to get the best rates possible from wherever the best rates currently are. Now, then YF2 came onto the market, and YF2 is a fork of Yearn Finance that was created on July 26, 2020. So not very long after YF1 or YFI was created. YFI farming stopped on July 26th, so this is again talking about the original one. YFY farming stopped on July 26th to prevent a sharp drop in the pool's liquidity. At the time, the Yearn Finance community proposed an upgrade dubbed YFT8, which suggested a weekly halving model for yield farming. Now, interestingly enough, more than 80% of the community voted for this proposal. However, it was declined due to the unset 33% requirement. And then, as a result, anonymous developers, and so many of these developers are anonymous. I'm always a bit skeptical when they're anonymous. Obviously, the creator of Bitcoin was basically anonymous. But nonetheless, I personally prefer to know who's behind something. That being said, it works the other way as well. If it ends up being extremely successful over the long term, I think it's actually better if you don't have, one person behind it, because that sort of creates a vulnerability as well. But in any case, as a result, anonymous developers decided to fork Yearn Finance to give birth to YF2. So YF2 incorporates the YFT8 halving model to ensure a fair distribution of the token. And this is something that we will see in the newer YF updates as well. They're all about fairness and, helping newer players onto the market. The YFT8 improvement encourages active participation while still allowing latecomers to earn rewards, as I just mentioned. So now we have YFV, which several of the commenters were talking about in the previous video. So again, it's birthed from the idea that the small farmers within the community pretty much have zero chance of taking part in the yield farming on Yearn Finance and YF2 to farm these governance tokens. So YFV aims to change this problem by making farming its governance token accessible to all sized players. Another improvement that YFV integrated is the on-chain voting system for the supply distribution rate, automatically executed based on the votes counted. So this removes any sort of manual input required for any proposals to be implemented. So this obviously sounds like an improvement on the original Yearn Finance, but the thing is, no one can really know which one will stand the test of time, And because several of them, many of them, pretty much all of them have gone up so exponentially recently, it makes it very challenging to even think about buying any of them right now, if you ask me. That being said, if you already bought them a while ago and you're in huge profits, and even if it dumps, you'll still be in huge profits, then all right, fair enough. Maybe, you can withstand the hit if you get dumped on, because you will get dumped on. It's just a matter of time when things go up this fast, this high, all right? Now, in a bit more detail, YFV here, this is from boxmining.com. Guys, if you want to learn about yield farming, check out the Box Mining YouTube channel and his website here. He is an expert on all things yield farming. And he says here, YFV is a Yearn inspired governance token that is rewarded to cryptocurrency yield farmers, also known as liquidity miners. So similar to YFI, YFV functions as a DeFi yield aggregator. And this is the interesting thing, they will release a vault-like product which will deploy different strategies to farm DeFi yields. So like pretty much all of these YF tokens, YFV is the governance coin on the platform, which will be used to vote on decentralized autonomous organization decisions. And YFV sets itself apart by also minting two elastic supply coins, namely VUSD and VETH, coins that will rebase to target the price of USD and Ethereum respectively. And again, as mentioned with several of these other coins, the team behind the project has chosen to remain anonymous. So here, how are people profiting off YFV, and what do I do with the YFV tokens? This is a great question. So YFV is the governance token of the YFValue protocol. This means that holders of the YFV token can use it to determine and update the functionality of YFV protocol and change or update the rate of distribution of YFV tokens. So it does give you some value in terms of making decisions in the protocol, in terms of making decisions about how much YFV is distributed. And then he says, of course, on the other hand, you can trade your tokens for ETH or USD. And trust me, the big players, the smart players who are farming these tokens, they're definitely not just keeping them, forever and ever. They're taking profits, and they will be taking profits consistently on the way up. So, if you're buying now, just realize that you're already a little bit late to the game. And that's not to say that it won't go up more. But again, guys, just think about things in terms of probability, Even if it does go up, it could go up at like whatever Wi-Fi token you've bought, it could easily go up 50% and then dump like 75%. This is what happens with things which go up exponentially. And especially because there's so many forks, YFValue, YF2, they have these improvements on the protocol, but they're not radically new concepts. They're basically just forks of the Yearn Finance protocol. So, it's not like they're radically changing the game. So in terms of the YFV farming risks, the biggest risks of YFV farming comes from potential vulnerabilities to the staking contract. Now, they have announced on the 30th of August that the audit of the YPV protocol has been successfully completed by the Arcadia group. I don't know if this means that they are 100% free from any bugs. It's still possible that things could go wrong, but obviously it's a good sign if they've been audited. And as someone mentioned in the video, Sushi has not yet been audited, and they're only offering 5 Ethereum for their protocol to be audited, which is really not much. I think when they offered that, the protocol, the value, the market cap was worth a lot less, but nonetheless, it is concerning. And as I say, the money I have in there, I'm ready for it to go to zero. And I hope that if you bought some, that you're also understanding that, this could it could be another YAM incident where bam, there's a vulnerability and it just goes to zero and that's it. That's just the risk that you take with crypto. But what happens when every YFV token has been mined or distributed? This is unknown. So again, there's a lot of unknowns in this space. It's all very new in terms of yield farming. And it is worth noting that YFV is currently backed by another asset. So then there's also minting risks. One of the biggest concern about YFV was the presence of minter keys, which could potentially mint an infinite number of YFV tokens. It kind of reminds me of the dollar, Well, if you have something which can just money printing machine, then obviously that's going to significantly decrease the value of existing token holders. Nonetheless, he says that developers have stated that all minter keys are burned and pools which could mint new tokens have also had minting features removed. Now, I'm not personally a developer. I wouldn't be able to sort of confirm this, but if you are invested in these things, then these are the types of things that you have to be aware of and understand. And for example, Box Mining, I don't think he's buying large amounts of these tokens. I'm pretty sure he's making most of them just through farming, all right? He's not like invested heavily in them, although I suppose that if they all come down hard, he might lose, I'm not sure. But the point is that he's not buying huge amounts of these, he's farming them, all right? He's getting them basically for free by providing liquidity. So if you're buying them instead, then you're kind of the sucker, because he's getting them for free. All these liquidity miners, yield farmers, they're getting these tokens for free. And you're just buying them from them, right? So just beware. Now, YFLink is an interesting one, combining the best of Chainlink and Yearn Finance. So YFLink YFL combines Chainlink's Link token with Yearn Finance's YFI yield farming liquidity mining mechanics. And the premise of this project was so it would be adapted for use by Chainlink enthusiasts. So YFLink was forked from Yearn Finance's YFI Yearn contract by switching it to accept Link instead of YCRV tokens. And yet again, Bobby Shafto and 4 other anonymous developers who announced the existence of the project. It also makes me wonder, if there's any legal repercussions to people creating these tokens. I don't know if there is, or if they are liable in any way, but I personally wouldn't want to be. Since Link tokens were required to be locked up to generate yield, it is thought that the launch of YFLink had a positive influence on the Link prices as the demand of these tokens increased. So as mentioned before, YFI, Yearn Finance, was actually launched on the 17th of July by Andre Cronje, I'm not sure how you pronounce that, as an experiment in yield farming and liquidity mining. It's so funny how, these experiments, let's just see what happens, and then bam, it's like $1 billion market cap. And in any case, it works by allowing the users to provide funds to a smart contract, which are then automatically distributed between DYDX, Aave compound lending protocols for maximum yield. So again, just like Yearn Finance, in return, the users yield profits and acquire YFI tokens. The YFI token is used for governance. So again, like the other YF tokens, they're used for governance. It's not a radically new concept. It's just that they're mixing it with Chainlink. Now, this is interesting, this YFL token, and we'll get to why that is in a bit. So YFLink's YFL token provides liquidity to link pools on multiple decentralized finance protocols such as Aave, Balancer, and Curve Finance. So again, the same concept. Users provide funds by depositing them into these protocols and then generate yield profits for the depositors. Then these users, i.e. the liquidity providers, also receive YFL tokens, so Yearn Finance Link tokens, as a reward. And in turn, these YFL tokens can be traded on exchanges such as Uniswap. And of course, it's very practical because although these funds are locked in, they can be withdrawn at any time. So here we're going to cover the difference between yield farming and liquidity mining. So now we're going to talk about 2 concepts which I'm sure you've heard a lot of, which is yield farming and liquidity mining. These are the 2 underlying concepts used in YFLink, and they both work together in synergy to incentivize users to provide liquidity. So yield farming very basically involves taking assets from users, so basically borrowing them from users, lending them to other different protocols, and then in exchange for that, they gain more assets than they initially provided. And liquidity mining is a variation of yield farming which allows liquidity providers to gain another governance asset along their usual yield rewards. So Box Mining here seems pretty bullish on YFL. He says that some analysts are even terming it the missing link between the 2 most widely used DeFi protocols, Chainlink and Yearn Finance. And he says since its deployment, the project has functioned normally without any bugs or exploits, and it has amassed an impressive total value locked in a short period of time. It may even become the go-to protocol for people looking to stake Link tokens for rewards in the future. So of course, staking is a big deal, and not all protocols offer staking yet. So it is very interesting when you see these protocols coming up and saying, hey, your protocol doesn't offer staking, just stake with us and you'll get rewards. So it's possible that this would continue, and again, although I'm very skeptical about a lot of these tokens, the reason is that there's so many of them and they've gone up so much. And they're pretty much none of them are in consolidation mode. So that's why I'm just giving you guys a warning about buying these right now. And CoinDesk here are also reporting, saying that decentralized finance has made a pivot to what might be called weird DeFi, a set of difficult to parse projects whose larger value to the ecosystem is suspect at best and whose community is at least 20% driven by inside jokes. Now, I definitely think that they do have value in the ecosystem, that is without a doubt, but the question is, how many of these tokens really have value? How many of these iterations, these changes in the protocol really add as much value as their market caps seem to, allude to? And my guess is that a lot of this value is just coming out of thin air and, it will evaporate very quickly. So, it's better to stay with the safer projects, which the ones which you understand, and also to, be very careful with your investments. If you're farming these, all right, fair enough. You're basically getting them for free. It's no big deal. But if you're buying them, then please be very careful because, you're kind of the sucker at this stage if you're buying them. But, I know several people who have bought, for example, YFV when it was just $20. And, if you have and now it's $75 or whatever, all right, fair enough, and it's you got it in at a good price. And all I'm saying is that right now is not a good price to get in at pretty much any of these YFI tokens, which I've looked at personally. And of course, yield farming will become less and less profitable as the Ethereum fees goes up. As you can see, the last 6 months, we right now have an average of $13.76. I've certainly seen higher fees than this. And this is an exponential rise compared to a previous month. We had a nice retracement in fees over here, but now with this yield farming going nuts again, it's gone up exponentially. And if you compare it to the last year, I mean, we didn't come anywhere close to these fees ever. Last 2 years, just nowhere remotely close to these fees. All time, we just never came close. We literally have hit the highest average transaction fees that we ever had, even in July 2018 over here. And in sort of January, February 2018, we were at $4, we were almost $6. Right now we're at $13.76. So, even if you're transacting, well, if you're transacting several thousand, you know exactly what you're doing, all right, fair enough. I'm not personally going to be yield farming right now. I want to wait until the fees go down. I'm not a whale by any means. And since it's largely experimentation for me at this point, I definitely want to, do it when there's lower fees. That being said, I still have my degen Sushi position, and as I say, I'll be holding it. I actually staked this on Uniswap, and you can see my liquidity that I've added over here. Actually, I was quite proud to add liquidity to a decentralized platform. I really feel like I'm part of the revolution now, even though I'm kind of adding liquidity for Sushi, which it's very new, sort of very speculative at this point, hasn't been audited yet. But nonetheless, it felt good to add liquidity and to take market share away from centralized exchanges. And yeah, originally I put 2.1 ETH and 119 Sushi, I think. So there's a bit more Sushi than there is ETH now. And yeah, I'll see what the profits are, and I'll let you guys know about that in future videos. But as I said, my specialty for the last several years has been investing in low caps. Trying to pick up the hype before it comes, before everyone's talking about it. So I'm looking on Reddit, I'm talking with the founders, going on the Telegram chats, and something I really recommend is that you talk to a lot of people. You go in the Telegram chats, go to Crypto Moonshots on Reddit. So here you have reddit.com, Crypto Moonshots. They often talk about, cryptos before they've pumped. So, but they don't do a lot of research. A lot of them, they just sort of say a few sentences. You have to still do your own research. But anyway, guys, yeah, it's been a long video already. So, that's been it from me for today. Let me know what you thought of the video. Let me know what you're doing with your portfolio. Have you consolidated into Ethereum? I know that I have sold a lot of my profits into Bitcoin and Ethereum. I think both the Bitcoin and Ethereum chart are looking especially good right now, and I'm going to make a video about that either later on today or tomorrow. All right, guys, well, with that being said, that's been it from me for today, and I will see you in the next one.